Today, we're going to unpack a real head-scratcher from Snowflake's latest earnings report, something that has Wall Street completely puzzled. We're going to lean on a fantastic deep dive analysis from BGVC to figure out why a company with amazing revenue growth saw its stock just fall off a cliff. So let's get into it. So here it is, the central question. How does this happen? Snowflake puts up these incredible growth numbers, the kind that should have investors popping champagne. But instead, the stock drops. So what's the deal? What did the market see that maybe we're not seeing? Or, and this is the real question, what is everybody missing? And here's that contradiction right here in black and white. On one hand, you have the good news, product revenue shooting up 29% year over year. That is huge. But on the other side, the bad news, the number that sent investors running for the exits, a profit margin guidance of just 7% for the next quarter. That's a huge drop, and it just set off alarm bells all over the place. So that's the disconnect that created all this confusion. Investors saw that 7% number, and they just panicked, thinking the whole growth story was falling apart. But the analysis from BGVC suggests something completely different is going on, a massive, strategic shift that the market seems to be completely ignoring. All right, let's just quickly break down the key numbers here. First, that product revenue, up 29%. Really solid. Now check out RPO, which stands for Remaining Performance Obligations. Basically, that's future revenue that's already been signed and locked in. And it's up a massive 37%. We're going to come back to that number because it's super important. But then you see it, the operating margin. It was a healthy 11% this quarter, but it's guided to drop to just 7% next quarter. And that, right there, is the puzzle we have to solve. So, what's the big theory from BGVC? It's that Snowflake isn't just making a few small changes. Nope. The company is going through a complete transformation. That hit to profits isn't a red flag at all. It's the cost of evolving from a data storage company into something way, way more ambitious. They are building an AI-powered future, and that investment is happening right now. The CEO, Sridhar Ramaswamy, he has a name for it, the Enterprise AI Nervous System. I mean, just think about that phrase for a second, a nervous system. It's not about static, passive data storage anymore. The goal here is to build a dynamic brain for a company, a system that doesn't just hold information, but actually understands it, reasons with it, and helps the entire business act on it. So what does this actually look like in the real world? Okay, picture a marketing manager. This person doesn't know a single line of code. They can just ask a question in plain English, like, hey, why did our sales dip in the Northeast last quarter? And how does that track with our competitors' ad spend? The AI just takes it from there. It digs through all the data and spits out a complete analysis with charts and everything. This is about putting the power of AI into everyone's hands, not just the data scientists. And that is a huge shift. So while the rest of the market is freaking out about that 7% number, what's the other side of the coin? Well, BGVC's analysis highlights what they call 3 pillars of strength. 3 key data points that they argue investors are either missing or just totally undervaluing. Let's dig into the first one. First up, this number, $100 million. That is the annualized revenue Snowflake is already generating from its brand new AI products, like Cortex. And here's the real kicker. They hit that milestone a full quarter ahead of their own schedule. This is hard proof that their AI strategy isn't just some PowerPoint fantasy. It's a real and a rapidly growing business. Now for the second pillar. This chart shows something called the scissor effect. See here, the current revenue growth is 29%, which is great. But look at the RPO growth, those future contracts. It's at 37%. When your future commitments are growing faster than your current revenue, that's a massive signal of accelerating demand. Companies are locking in capacity now because they know their AI data needs are about to go through the roof. And the third pillar, it's all about stability and stickiness. 125% net revenue retention. Let that sink in for a moment. Even in this economy, with all the competition out there, Snowflake's existing customers are still spending 25% more than they did last year. This just shows how critical their platform has become. It's the foundation of their customers' data strategy. Of course, you absolutely cannot talk about Snowflake without talking about their biggest rival, Databricks. I mean, this is one of the biggest showdowns in the entire tech industry right now. And to really get Snowflake's strategy, you have to understand how they're trying to position themselves in this fight. Here's probably the easiest way to think about the difference. Databricks is like a builder's toolkit. It's incredibly powerful, it's flexible, but it's really designed for expert data scientists and engineers. Snowflake, on the other hand, is aiming to be a finished platform. It's super easy to use, requires basically zero maintenance. And in a world where companies want everyone using AI, not just the experts, that simplicity could be a huge, huge advantage. And get this is wild. Databricks, which is still a private company, is now valued higher in the private market since Snowflake, a public company, is on the stock market. BGVC points to this as a major signal that public investors might be completely sleeping on Snowflake's real long-term potential. Okay, so let's tie all these threads together. Let's get to BGVC's final take on all of this. What's the real story behind that scary profit guidance? Well, it all comes down to one thing: the price of transformation. So the big takeaway here is that the 7% guidance isn't a sign of weakness, it's a strategic investment, a deliberate choice. First, they are spending a ton of money on GPUs, the expensive chips that power all this AI. Second, they're aggressively hiring top-tier talent before the huge wave of demand really hits. And third, they've got a new CFO who's probably setting the bar low, under-promising so he can over-deliver later. It's all part of the game plan. So, what does this all add up to? Well, according to BGV's analysis, the market has just completely misread the tea leaves here. They're setting a price target of $285, which suggests a massive upside once these big, bold investments start to pay off. And this quote from the report, I think, just brings it all home perfectly. For investors who can see past the next quarter, this isn't a crisis, it's an opportunity. They compare it to Adobe's painful shift to the cloud back in 2015. Yeah, it hurt the stock in the short term, but that move unlocked unbelievable long-term growth. And so, that leaves us with this final question. Snowflake is making a huge bet. They're sacrificing profits today for what they believe will be total dominance in the age of AI tomorrow. The market is skeptical, to say the least, but the underlying data seems to tell a very different, much more exciting story. So is this short-term pain a price worth paying for that long-term gain? Well, that is the billion-dollar question you've got to answer for yourself.